Welcome to our channel, where we'll show you how to retire rich or at least retire with enough money to buy a really nice rocking chair. The S&P 500, also known as the Standard & Poor's 500, is a stock market index that tracks the performance of the top 500 publicly traded companies in the United States. It is considered a benchmark for the overall performance of the U.S. stock market and is widely used by investors and financial professionals to gauge the health of the economy and make investment decisions. One of the most attractive features of the S&P 500 is its historical return rate. Over the long term, the S&P 500 has delivered strong returns for investors. According to data from the past 90 years, the S&P 500 has delivered an average annual return rate of around 10%. This means that if you had invested $10,000 in the S&P 500 90 years ago, it would be worth around $14 million today. However, it's important to note that past performance is not indicative of future results and the stock market does come with risks. The S&P 500 can also be volatile and experience periods of underperformance. For example, during the 2008 financial crisis, the S&P 500 experienced a significant drop in value, losing around 50% of its value. Despite this, over the long term, the S&P 500 has proven to be a reliable investment option that has consistently delivered strong returns. When looking at shorter time frames, the S&P 500's performance can be more volatile. For example, over the past 5 years, the S&P 500 has delivered an average annual return rate of around 10%. However, over the past 1 year, the return rate was around 7%. It's important to consider your investment time horizon when investing in the S&P 500. If you are investing for the long term, the S&P 500 can be a great option. But if you are investing for the short term, the S&P 500 may not be the best choice. Another important factor to consider when investing in the S&P 500 is diversification. The S&P 500 is a broad index that includes a wide range of companies from different sectors and industries, making it a relatively diversified investment option. However, it's important to remember that the S&P 500 is still heavily focused on the U.S. stock market, so it's important to also consider investing in other markets and sectors to further diversify your portfolio. It's also important to consider the fees associated with investing in the S&P 500. One of the most popular ways to invest in the S&P 500 is through a low-cost index fund, which can be found with fees as low as 0.03%. In conclusion, the S&P 500 is a reliable investment option that has consistently delivered strong returns over the long term. It's a great option for investors who have a long-term investment horizon and are comfortable with the risks associated with investing in the stock market. However, it's important to also consider diversification, fees and your investment time horizon when deciding to invest in the S&P 500.